With us is the Chief Investment Officer, James Bevan. James, you haven't bought shares.
Absolutely correct.
Why?
I have two issues. First of all, if I were to look at the background of the commodity cycle, I think there are some real risks that we get a further blow-off. We've already had some considerable tension in the markets in terms of the bulls and the bears, not quite clear which way prices are going to move. And I think that over the summer we could see prices come down, and therefore we will see better buying opportunities for all of the commodity-related players. The second issue that I have is I still find it really very difficult to understand the detail of the Glencore business. They published a 1,600-page prospectus, an enormous wad of paper to wade through. But having been through it, a fine-tooth comb along with our analysts, I still don't really understand the extent to which the company makes money through speculative bets or simple arbitrage. And because I don't understand, I have to walk away, and that's my position.
James, when you actually speak to a lot of the investors, other investors, or analysts, they say the reason why they invest is just because in their mind they know that there are going to be investors in the Middle East with a lot of firepower behind them actually pushing up the stock. Do you think that the stock will rise, but you're still uncomfortable investing in it?
I think in the very near term there is upside potential, quite clearly, and today we're going to see a significant premium because Glencore itself has been priced at a level to create that premium in order to ensure there is enough money. Nothing would have done sentiment worse than if there was an immediate markdown. So I'm absolutely confident that the share price goes up in the immediate term, but I'm very uncomfortable about what happens thereafter.
And that's actually the share price behind us, 2.8% higher, 545. What happens if they do indeed merge with an Xstrata or another big mining group? Would you then feel more comfortable to come in because it's more tangible?
Well, I think there are two issues. First of all, as we know and understand more about the Glencore business model, so we can become more comfortable, we understand the nature of risk and return. And as knowledge is built, inevitably one is in a better position to make informed decisions. The second challenge, of course, is where will commodity prices go? Now, I am absolutely in the long-term bull camp that we are going to see commodity prices rise, but I still have this very considerable concern. We've had such an extraordinary bull run that I think we have 2 or 3 months more of downward movements in prices before we can get back up again.
James, what is the biggest, most important piece of advice that you'd give to an investor? Because talking to you today, it really seems that you don't invest in anything that you don't understand, which I imagine is not what every investor does. Is this your kind of motto? Is this, how you run your business? Well,
at a detail level, it's critically important to understand precisely what you're buying. I'd say that as advice for investors, the principal issue is to have a plan, an asset allocation that correctly matches your assets against your liabilities and objectives. And I think that the worst thing that private investors can do, or indeed institutional investors can do, is to get sucked into the sentiment of markets, to become overly keen when prices are elevated and all the good news is in prices, and conversely to become very bearish and sell everything when all of the bad news is already known.
Do you think there is going to be a big correction on the commodity markets in general?
I think there is a real risk that over the next 3 months, when we have the end of quantitative easing, we have continued tightening of policy in the emerging world, and I think that we will have a reversal of the short dollar, long commodity trade that has been in markets now for about 9 months.
James, thank you. James Bevan there.